With over 23 years of experience, I'm Anthony with Simplified Profits, and this is our stock market update video. It's March 24, 2024. And right now, we're going to take a quick look at all of our ETFs that we keep an eye on, and we're going down the line by the biggest year to date gains. Now, this is MSOS. This is a cannabis ETF. So we were recommend buying this, and we had our eye on this when it was oversold here. My son was actually building a position here, and more here. He's, I believe, still in this. But anyway, we entered here. You can check our stock twits last week. We actually, I think, exited with about a 10 to 20%. I think it was about a 15% gain. Would have to go to our transparent account video and take a look at that. Actually, you know what? I don't even think we covered that on our last one. Have to go back and see, but it is one of the trades we made. And you can see some of our other videos where we covered. We believe this will hit $12 just looking at the weekly chart here sooner rather than later. We do have it in multiple accounts besides our trading accounts. We went ahead and exited that. And our favorite single stock in the sector, GTBIF. I mean, we called this back in, it was November. No, yeah, it was December of last year. That NBWXT. We'll take a look at both of those real quick because we do have them in multiple accounts. I mean, that stock is up 40% since our last call. BWXT has just been killing it. Some of our favorite stocks and favorite sectors for the next 10 years. But yeah, we bought both around the same time. And I mean, this thing is up not as much, 33%, same amount of time, which still crazy gains. We've been buying this and kind of alerting this since January of last year. We built a pretty big position in it, about 4 different accounts on every pullback. And I believe our positions are up 70-something percent. And that'll be a stock we're hanging on, just like the cannabis sector, for the next 10 years. Hoping my kids will thank me later because it's built up pretty strongly in their custodial accounts. I believe they're all up 60 to 70% already. And I'm pretty excited about that company and the growth it has. Now, if anything changes on the stock chart, crosses under the 200-day moving average, starts looking bearish, we may lock in gains and revisit it later, but I don't think that'll be the case. All right, so MSOS is the cannabis stock. Like I said, cannabis ETF. I feel like 12, just looking at the weekly chart. That will be sooner rather than later. And if you zoom out, I mean, this thing, I think there's huge growth there. If cannabis becomes federally legal, they're supposed to reschedule it, which makes it supposedly a less dangerous drug if they mess around and make it legal, which they might as well. My personal opinion, cannabis is much better than alcohol. You put one bar next to the other, you'll see what I'm talking about. But I mean, this thing could easily, over the next 10 years, get back to its recent highs, up, 500% gain. Those are the kind of gains you should be looking for in the market for the long term. Let's take a look. And we got semiconductors. So semiconductors, this thing has been on a tear, up 30% for the year. Now, these are really the only 2 ETFs beating our No, that's not beating our transparent account. Our transparent account's up 35% year to date. So cannabis is really the only ETF out there beating our transparent account, unless you look at the leveraged version of semiconductors, and you'd be beating our transparent account. But semiconductors, I mean, over the next 10 years, I feel like the demand's only going to grow. Ton of robotics, tons of drones, technology is only going to grow. And even when software grows, it makes servers work harder. It makes the need for new chips. It creates a bigger demand for this industry. Now it's up 30% year to date, and it was up 70% last year. So it has been ripping, and I believe we have it in our long-term investment account, okay? But it's nothing in my trading account right now. We locked in profit, but over the next 10 years, I mean, I think that's definitely a good long-term investment. But right now, looking at the most recent stock charts, at your weekly chart, I believe we're in the need of a good pullback. Whether or not we'll see it, ladies and gentlemen, because market's been crazy. I mean, we could easily retrace up to the top of that wick, another 5% coming up, and the month isn't even over. It may be next week, it may be next month. I mean, this could continue ripping. You can see the breakout there, which we were calling. We said we'd see a pullback there, which we did for about 3 months. And then it just rallied up, and we even stayed. To go back and check, ladies and gentlemen, all the videos are there. That if that broke out that 160 point, we'd see 200 and 220 very quickly, or 180 and 200 very quickly, which we did. And we've bypassed that. And I believe we even called 250 after that. You have to go back and check me. Very, very strong sector. So it just depends how you're trading it, ladies and gentlemen. Now, we did get in our transparent account last week, and we locked in 15% and SOXL. You can check our transparent account update. We just did one of those. But we bought it when it was oversold last week and checked the stock towards our transparent account. Locked in about 15% right there. It has rallied up, but that could continue to go higher. Usually our swings, we would wait till it's overbought, but it has been a crazy year and crazy all around the world. So usually the market will just swing, ladies and gentlemen. As you can see here, you get all types of swings. Usually it takes about a month, 2 months. The market has been, over the last couple months, really since January, just crushing it. Haven't seen too many pullbacks, and we'll look at that as we go along these other ETFs. And the crazy thing is, if you start looking at some of the news out there, for one, it's an election year, but we have just our most recent news. We have a $1.2 trillion budget that just passed when we're $34 trillion in debt. It's not really good for inflation, which isn't good for rates, which don't know how the market will take it, because inflation, to hedge against inflation, the dollar gets weaker, means everything costs more, even stocks. But at the same time, market wants rates low. Who knows what we'll see go on? Trade the charts, block out the news or the noise, but just search Russia news. I mean, Russia is heating up. They just had a terrorist attack. Man, pray for those people. I believe 140 people killed. Really, really crazy. And then they just launched their biggest airstrike on Ukraine since the start of the war, ladies and gentlemen. Things are not cooling down out there. We have nobody brokering peace. We have no leader really leading the free world, leading by strength. I mean, if you look at what has just happened over the last couple of years, it's like the world has went crazy. And then let's see, if you look at just the news in the South China Sea, I mean, just search South China Sea. So Chinese Coast Guard ships attack the Philippine vessel carrying scientists in South China Sea. They basically hit them with water cannons. China warns Philippines against escalating situation. That was 3 hours ago. Philippines accused China of new water cannon attacks. Let's see. And then there's a bunch of Taiwan news with China out there. We got a border invasion going on with the U.S., and the U.S. is attacking the only person who will go back in office to fix this border invasion and deport these people. And they are attacking them. They're probably going to seize his assets on Monday. Things are getting crazy out there, and it's an election year. So when I say this is not a normal year, ladies and gentlemen, where the markets just swing, the noise is just noise. Now, keep in mind, I've been doing this for 23 years, and I have seen 9/11 type market. I've seen the housing market crash. I've seen COVID. I've seen a lot of stuff in the market, and this is a very concerning, crazy year. So that's why we have been very, very cautious. We've been locking in profits early. We haven't been participating in full swings, like riding this out till it's overbought. And usually you can get 10% a month average in the market by following the process and simplified profits. But we've dropped our average down to 7 to 8% a month just because. And if you know anything about compound interest, that's really, really good, period. Doing anything better than the market. Most people can't do that besides our congressmen and women and people that's been around for a while. But it was a simple process I follow, and it has worked out very, very well for me over the years, and it will continue to do so. And you can see that on our transparent account update. But anyway, usually we would hold this till it's overbought, but we locked in profit when we had it. If you don't take your profit, somebody else will. And holding anything overnight is very, very risky. That terrorist attack we've seen in Russia, we could be seeing that take place in America at any time, which is very, very scary. Nobody wants to think of it. You much rather scroll Facebook and Instagram and see, everybody's fake lives, but you should be very, very cautious, and you should have your eyes open on everything going on around the world, because it's getting crazy, ladies and gentlemen. Oil up 15% for the year. Probably has a lot to do with, obviously, as always, supply and demand, but what's going on around the world. And you got a lot of people bullish on oil. And I mean, you could easily see it. I mean, we could see 80 in a couple weeks, which isn't good for inflation either. So keep that in mind. We are very likely to see inflation get higher. If you think about it, we got a ton of farmers protesting all over the world. We got 1.2 more trillion stacked on top of the 34 trillion for U.S. debt just recently. We got oil going up. We've had a slow cool down, but if the inflation's swinging like the stock market, we may be swinging right back up there. Feds may have to raise rates again. And keep in mind, these rates aren't that low, ladies and gentlemen. I bought my first house when I was 20 years old, and I believe the rates were, that was, I have to think back, 2023, something like that. Or not 2023, I'm sorry, 2003. And man, rates were right about here, because my payment, the house was a lot cheaper by about 80 to 100,000. And, I refinanced when payments got cheaper. My mortgage was about $750 a month. You can't get that nowadays. Okay. You're just not getting those rates. You're not getting the houses at that price. Housing market's hot, which is good for the best realtors and loan officers. But needless to say, there's a lot of people out there struggling. As long as the companies continue to lay people off, and do their thing, make sure their balance sheets are right, the stock market may go up. Same with inflation. Inflation will create the dollar to get weaker. More money you print, assets, all assets, including shares of companies, will go up. So it'll be a crazy, crazy year. That's why we're very, very cautious. So MGK, I follow a growth index and also MGV just to see if one basically contradicts the other. Not really contradicts the other, but goes the opposite way of the others. Like if somebody's moving out of growth into value, you'll see one start looking bullish, one start looking bearish. Actually, both of them's doing very, very good. And Vanguard does just very well overall. I don't like giving them my money because I like keeping my voter rights. So most of my long-term investment accounts, I manage my personal stocks, really based out of the book Simplified Profits, just to simplify that answer. Banks, this is the bank ETF, up 10% for the year. They have been going basically straight up since they crossed over the 200-day moving average, which if you've read our Simplified Profit books or follow the channel, you know how important the 200-day moving average is. They're up 22% since they crossed that. Let's look at the weekly chart on that. So if you look at the weekly chart, ladies and gentlemen, be cautious. They are hitting previous all-time highs. Looks like they probably went above that a little bit. Let's check the monthly out. So the monthly, they've broke all-time highs, but started to retreat. Could be in for a pullback. Like I said, this is a very, very cautious time for me. We're sitting all cash in a transparent account, which you would have just seen. S&P 500. All-time highs last week. Been grinding that 20-day moving average. Last real pullback we got was back in January, and it has just ripped since then. I believe we entered Quad X a few times, but it's up 11%. If you would have entered Quad X, you'd be up 40% just in the S&P 500. Once again, looking like it may pull back, even though it broke the all-time highs. But the question is, what's going to shake this market to make it pull back below the 20-day moving average? The market has been almost unshakable for the last couple of months. We've seen all types of crazy stuff happen. Everybody's been, I trade and follow the charts. I try to block out the noise, but I definitely pay attention because at one point we're getting close to something happening that the market's not going to be able to overlook, ladies and gentlemen. And at that point, when everybody is in and everybody's got profit, you're going to see people. That's when you see the big pullbacks because everybody's rushing out to try to lock in their profit, right? Once that fear starts in, I hear some people may not. Some people may know, heck, it doesn't matter. I'm just going to keep buying, which is kind of might be where we're at now. A lot of my swings have moved to the hourly chart. So the swings we used to do on the daily chart, we're now doing on the hourly chart. Maybe I'll do a video of that later. But when it's grinding up looking this strong, a lot of my videos you'll see, man, this market looks crazy strong. We were buying on the hourly chart pullbacks and just scalping the strength, okay, just to keep things moving, grabbing our count percentages. But we're not holding it long because anything could happen, and my stomach just hurts when we're buying at all-time highs. I like buying when it's cheap, good pullback, oversold, and just grinding out those swings, which we have not been seeing lately besides the hourly charts. But we could easily be due for one. Look at the weekly chart. We'll take a look at that real quick. As you can see, it definitely broke out there, and it's just been grinding. I mean, we've seen one. So out of 20 bars, 20 weeks, out of the last 20 weeks, we got 1, 2, 3, 4 red weeks, and those are barely red. It's crazy. Usually you don't see that. As you can see, usually this is a weekly chart, so your swings may not be as big, but down here, you can see almost every other week. Got a pretty decent one there. Yeah, 19. So check this out. 19 bars there, closer to our 20, where you had 1, 2, 3, 4, 5 red weeks, kind of on the verge where we are now. And then look at that. Then you had a 5-bar, 32% drop, ladies and gentlemen. Like I said, I've been doing this for 23 years. This is where you're cautious, okay? Because this is where those drops take place, all right? So we've been very cautious. We've been locking in our profits. Just really trying to protect our money, right? We don't want to take big losses. We don't want to take any losses. If I'm in a position it drops, we're managing it, we're average lower, and we're locking in gains, period. This is XLK. This is basically like triple Qs, but a little different. Assets in there might be a little different. Companies in there might be a little different. Just check them out. But they are both up about 10%. And they have been doing the same thing, ladies and gentlemen. We did have an oversold pullback, close to it right there. Same time we pulled back in semiconductors, which is what me and my son entered. SOXL instead. This is a water resource ETF. This is something I follow because in my long-term accounts we do. So CWCO. This is a position I've had my eye on for some time. I mean, we built a position up, crushed it there. Kind of got out during under the 200-day, re-entered. I mean, I couldn't tell you we've been up pretty big on this position, but it's averaged back down. That's what things do. They can't go up forever. But the overall ETF is one we like to build a position on, and I'm kind of keeping my eye on that to pull back. Looks like it broke out, but I don't chase breakouts. I don't buy breakouts. I did before. It's not really consistent gains. You could easily have fake pullback or fake breakouts and then a pullback. I'm not into that. I like consistency on gains. This is gold. I mean, it's been overall gold is nothing. I mean, so just over 4 years it's up 40%. So not really bad, but usually gold doesn't really. I think the average over since gold came out is like 3% a year. So nothing I really want to hold. It's not a company making profits. It's just a hard commodity asset. So we actually entered LABU based on XBI last week, and we took about I want to say 8% gain on that, somewhere around there, locked in right about there. Just because it did rally after the Fed. I mean, we got in based on the oversold indicator, bullish looking chart. And it actually rallied after the Fed's meeting, but I don't think the Fed's meeting was good for it, right? Rates staying higher for longer is not good for biotech. It's not good for buyouts. It's not good for borrowing money, which is really what biotech is. A lot of speculation, a lot of borrowed money, a lot of debt, a lot of hope for buyouts of the smaller companies by the bigger companies. And you can tell it sold right back off after a couple days. So we just went ahead and participated in that quick jump swing, and we got out. Like I said, this isn't a normal year, so we're locking in profits quickly. Dow Jones, we actually, I think, scalped Dow. I have to go check the transactions last week. I believe, it was last week. Just a few percentage points. I would like to see Dow Jones just trend sideways, and I will continue just to play the bowling band swing on Dow, and just scalp, a few percentage points here and there. And that's up 5% for the year, 2% for the week. But yeah, that could easily pull back. If it does, I would plan on catching at the bottom Bollinger Band. It's definitely the less volatile of all these. We got ITA, which we were in DFIN a while back, right around this area, locked in some profit, but it has continued to move up. And with all the things going on around the world, aerospace and defense is really a hot sector. It's actually some of my favorite long-term. I think DRS. We bought this, I want to say, back here. Even added more on the breakout. Mainly my custodial accounts, which I think they're up 10, 15% on this already, even with the pullback. A few other stocks out there I could throw out there, but ITA, keep an eye on this. It is right at those tops. Now the weekly definitely looks like it broke out, but it's pulled back, and it might see some resistance right there. But if it keeps going up, which looking at what's going on around the world, might be where you want to be. It's a good aerospace and defense. I would like to see it pull back so I can enter again, honestly. I don't know if I'll play a breakout if it breaks out or not, but that and oil, so DFIN would be the leverage version of that we play. If this pulls back again, I'm definitely a buyer. That will be what I'm looking at with everything going on around the world, because things are not cooling off, ladies and gentlemen. Our president is not brokering peace with Ukraine and Russia, or with Israel and Palestine, or with anybody. It's letting border invasions take over. It's letting a lot of things happen that should not be happening. And the world's just breaking out into chaos. And that's when you see these defense companies start getting bigger contracts, start just rallying, just in the fear of what's going on around the world. IWM, believe it or not, so I do have like a high-risk gamble account that I use a portion of that to kind of short the market, trade options here and there, which I don't believe anybody should short the market. Don't like the mind frame it puts you in. But if you know what you're doing and can block out your emotions. Anyway, we entered TZA Friday on here. But anyway, I definitely believe this is going to pull back. It is really the only sector, which is just small caps, that hasn't hit all-time highs. Rates being high is not good for them, especially sticky inflation or inflation that may go up. But, I'll probably lock in profits in TZA when it drops to about the 200 area. And what I do in that account is actually just take my profits and move them into long-term account or move it into like my long-term income account and just buy. For instance, I think last week we entered PLD. I bought more IBM, ABBV, just bullish charts on pullbacks, pays a decent dividend, and that account, it's kind of amazing how that grows. And then we got Bug. This is a cybersecurity ETF we watch. Not really interested in making any entries in that. As you can see, it's just kind of, you got a high there, the highs and the lows. I mean, I need to see that break a certain direction. I need to see that get bullish again and then pull back. It's not honestly, it's not very many global X ETFs I like. DIV is one for income, but really by buying bullish dividend companies that pay a decent dividend, bullish charts, you definitely outperform whatever this is going to do with its monthly dividends. But I do own a little bit of stuff like that pays monthly. And then we got the real estate sector. Has a lot of room to get up and hit those highs. That's basically your RITs. Pull back to the oversold territory. I almost added that to my long-term income account, but I did not, just because I would much rather hand pick single stocks that are bullish and charts look a lot better. But I'm not too excited about that. You would think how real estate market is that the ETFs would be at all-time highs, but at the same time, just depends on what they're invested in. Depends if they're 100% occupancy. There's a lot of stuff you got to look into when you're getting into those ETFs. Then we got the Bitcoin. Doesn't have a 200-day moving average yet, but I think this one does. I think there's one over here. Yeah, it has a 200-day moving average. Bitcoin strategy ETF. So that's a possible 15% swing. I'd like to see it hit the bottom Bollinger Band. I don't know if this will become something I end up trading or not. Obviously, it's just based on Bitcoin, which I don't like. Right now, if you look at the market, this is ETFs. We have 19 bullish oversold ETFs. Nothing I really like. You do have XBI and LABU, but looking at the overall, you got medical devices, which whatever. Looking at the overall macro situation, we could definitely see that turn bearish again. Hasn't been bullish for too long. And it's XBI, it's biotechs, small cap. If you know anything about it, you should probably stay away unless you're scalping something real quick. And then we got, real estate. I mean, this is basically your leverage version of, which I don't even think I have that in my 3X portfolio. Yeah, that's your leverage version of the IYR we just looked at, which is probably in here somewhere. Switzerland. It's almost oversold. And we can take a real quick look at some of the biggest charts. Well, out of the SP 500, these are all bullish, and I have it situated oversold stocks basically first. So if I just go through here, STX, which I don't like the PE on this company, not really doing good financially, but I think the market kind of has a mind frame that it will start doing well financially because it has ripped up over the 200-day and has been doing well. I think they are expecting it to kind of change its financials around. Thermo Fisher, great company, but I mean, it's been, heck, if you've been holding this for the last 2 years, you're just sideways, which is why I never fall in love with a stock, ladies and gentlemen, and why I try to grind and be a little more active so I'm not holding sideways bullcrap. But let's see here. Let's go to the oversold real quick. I want to say my favorite, ABBV, which I bought in my long-term investment account. You got T-Mobile. There's really not much out there. So AMD is interesting just because it's in that semiconductor sector. But if you look at the, I don't like that for the gap down. But if you look at the PE on this, I mean, it's somewhere like 300. So there's a lot of money being invested in semiconductors. There's a high demand. So 300 may be okay for it. Keep an eye on it. It may be something to swing trade because it may jump back up to those highs, 26%. I mean, to its previous high, ladies and gentlemen. So that would be my favorite chart, but kind of not really for the long term, just because the PE is so high. I mean, it's much higher than Nvidia, which is kind of crazy because they have the market on semiconductors, which I guess this is kind of higher because they have more room to grow because they could take some of Nvidia's market. But who knows what will end up happening. What could also happen is China could come in with a bunch of cheap chips and mess that market up. So keep an eye on that because that is happening as well. Other than that, ladies and gentlemen, probably talked to you for a little too long. I'm out.